Good morning, traders.
Good morning, Ryan. Good morning.
Andy. Sorry?
I said good morning, Ryan. Good morning, everybody.
Good morning, mate. You all right?
All good, all good.
Good. Yeah, I hope everyone's doing well, having good days trading yesterday. Wish you obviously the best of luck today. Yeah, got a few things going on this morning. Another one where you walk in and suddenly get hit with a few headlines. Just to run over some of the bits and pieces. Not too much out, but some significant items anyway. Just going to kick off quickly with the UK. We had Boris Johnson, or now going to call him Teflon Boris at the moment. He sailed through the Sue Gray report yesterday, took a lot of flack in Parliament, then took a lot of flack in a press conference afterwards. No signs of resigning, which is the first and foremost thing we need to look at. I was very bearish on Boris Tuesday evening, purely because of all the stuff coming out in the press of these parties and everything. But when you look at them in a bit of closer detail, the stuff he was stuck into didn't look like much of a party, if you ask me. One of the pictures has him drinking a glass of apple juice next to a pack of sandwiches.
And sandwiches from Sainsbury's, right?
Yeah, exactly. That's hardly, an art on the tiles. But the main situation seems to be that a lot of the staff were getting up to mischief, potentially behind his back. The big questions being raised over how much he did know about it all. It is worth noting that the government offices there, number 10 and number 11 Downing Street, are part of the government offices, and there's loads of different rooms and offices and hundreds of people working there. So did he know about it? Did he not know about it? That's the question at the moment. Some of his, as I say, a lot of his staff are the ones that are really in trouble for this, and some of the antics they got up to, pretty much taking a piss. As he's the boss, he has to wear it. But the risk for him resigning now is a little lesser. What we've moved on from is him actually resigning, or any risk of him resigning off the bat, to what his own MPs are going to be doing now. Are they going to be putting in these letters of no confidence to get it up to the 54 number that's required to trigger a full no confidence vote? The way it's gone at the moment, there's been probably a handful of people who have dropped their backing for him. It hasn't been a flood. So the fact of the matter, it looks like it's possible we could creep up to this 54 number. We're probably in the high 40s, I think, at the moment. But there's not been an avalanche of letters going in. So even if we do get to a vote, it's pretty strong chance that he would survive a vote, he would win a vote, no confidence vote, and then he gets to carry on. But today and maybe tomorrow, if we don't hit that 54 mark, then the Teflon coat is on, and he's going to survive this for the foreseeable future. So that was just the UK news. China, we've had a bit of noise out from there as well. There was a story out overnight from the Global Times, and this is a big state sponsored or state run press outlet. And as you can see there, it's held an unprecedented meeting on stabilising the economy. Some 100,000 participants in a teleconference. I don't know what price plan they're on with Zoom, but I assume it's going to be Enterprise plus to get 100,000 in there. But anyway, some talk from this one, what they're going to do, putting in loads of policies in place around the country to get growth picking up, to try and halt this slide that we're seeing there. The market's pretty much taken that in price terms as likely that there's going to be more easing to come. Dollar yuan has jumped higher again. It's as Kay pointed out in the room, it's undone 8 days worth of moves in 2 days. We'll look at the chart in a moment. So the question there is, what are they going to do? They've been a bit reluctant to go full on easing at the moment. The market was expecting more rate cuts, bigger rate cuts, and we've not really seen any of the key measures cut hugely yet. We're still perhaps waiting for a full interest rate cut, maybe another cut to the reserve requirement ratio. Those are really the two biggish ones to look out for. But we've been waiting, and nothing's really come on those. And even some of the lesser rates that we saw the last week or so have only been cut small. So is it going to be a big easing cycle they're going to get into, or is it just going to be a big spending investment cycle, which is what China can do? You know, one of the things they can do is throw money at it. I mean, we all know about the ghost cities and, you know, building loads of towns that no one lives in. It's a bit of a false dawn, because it means spending money, it means a jump in activity, it means investment, and it gets the growth number up, even if the end result means that there's not really anything substantial at the end of it. So what China's going to do there is going to be interesting. We know they've got the facility to be able to boost their economic numbers. We know about data manipulation over there anyway. That's by the by. So for now, dollar yuan is probably going to be heading back higher. We may get a look up at those highs again. But as I say, we'll look at the chart in a moment. Looking at the US, the Fed minutes last night didn't really tell us anything new. We know what the Fed are doing. As I mentioned on the Face webinar, staying in the chat room, because nowadays we get so many Fed speakers coming out after the FOMC, 2-3 times each, an absolute flood of them. We know what their views are. In years gone by, the Fed minutes were a bit more important because we didn't get that flood of comments, but now we're saturated with them. They've lost their meaning, really. So pretty much they're all aligned that we're going to be getting more 50 pip hikes to come. Then potentially they'll dial down a bit towards the end of the year or into next year, just while they see how things are progressing from there on in. So it could be a situation that they won't stop hikes after the next 50 pip rounds, but they may dial them down to maybe 25 pip hikes or spread them out a bit further. We won't know that until, you know, probably the next couple of meetings, the path for that. So on the US side, not really much else to come out there. And now this morning we had Kuroda coming out. He was there with the news. You can see that in the Flow News blog on the side there. He came out earlier. You could call them hawkish comments, but they were unhawkish comments, if you catch my drift. He wasn't coming out and saying they're going to hike next month or anything like that. He just put a bit more into his prior language about what they will do when they start debating an exit. Now it's a bit strange. He said that they will debate it at the right time. And then he's gone on to say there, you know, they're looking at hikes and the balance sheet. That'll be their main tools. They're looking for a smooth exit from that. But I looked back at his prior speeches over the last few months. And it's been for a central bank, it's been a bit of a quick change. You know, in March, he said it was too premature to talk about an exit. In April, he said they were discussing an exit, but it was too soon to reveal the details. And then today we're getting a bit more specifics. So those comments this morning came out. His first comment off the bat, though, was that he didn't see inflation sustaining at 2% in this fiscal year, nor the year beyond. So he got that line out first. So they're still sticking to their plan of their view that they don't see inflation becoming sustainable at 2% for the foreseeable future. But then he's dropped these other little comments about what they may do should they look to exit. So as I say, it's not a switch to we're going to be hiking at the next meeting, but it's putting the language out there. It's putting it in the public. It's talking the key words, hikes, balance sheet, that sort of thing. It just gets the market seeing those words and getting used to those words, and then the language may pick up slowly as we head towards the next meetings. In the meetings, it's these subtle shifts with central banks, and as I mentioned there in that post, you know, they're all about the big central banks. They're all about slow turns and hints at the start of policy changes, just getting the market ready for the language, and then perhaps it picks on from there as inflation rises.
Yeah, Ryan.
We saw the same. Yeah, go on, mate.
On this Bank of Japan thing, and because people were wondering whether he was in Davos, but it appears to me, because Kishida was speaking just before, that it was like a kind of a conversation or something in the diet between the two of them. It's not a Davos moment like we saw 5-6 years ago when half drunk he announced to put yields into negative territory. It's more like what we have seen from the Fed May, June last year, when they prepared the market on the shift that was the change in tone. And I think we have to compare it with that. It's not a done thing yet, but we can't forget that he's in his last year of tenure at the Bank of Japan for one. So if any changes should be done or will be done, he might do it himself to prepare the terrain for his successor. And two, looking at the level of the yen, which in real terms is the weakest in I don't know how many decades, it's a perfect window of opportunity for them to do it now, because the importers are suffering. The trade balance is not great. So looking at the yen level, it's really the perfect window of opportunity to do something in the next few months. And as I said before, I think this year we will see change at the Bank of Japan.
Yeah, cool, mate. And you're right. You know, we saw the same from the ECB. You know, we had the hawks coming out giving their view, but Lagarde stayed a dovish self or a neutral self about the future. Didn't want to commit to any hikes. Then she started saying we're going to end QE beginning of July, maybe hikes some weeks later. Then that switched into, well, now we're going to get hikes in July, September, and negative rates will end by the end of Q3 and be positive after Q3. So it's these language changes that the markets pick up on. It's what we watch for. You know, myself and Kay and others in the room, we're really try to get tuned into what central bankers say, because it can be the smallest language changes that flip prices, expectations, and the market right around. And those, if you can catch those early, those are the trends you want to get in on. But we'll talk about that in more detail when we look at the pricing. Just a quick look at some of the other stuff, just a look at the options. A couple of stand out today, not huge. We've got euro dollar around about 106.80, 107 for 1.3 billion. We're trading at what are we at, 106.97 at the moment, so right in the zone. And pretty much the only other one of size is dollar CAD in the 127.90, 128.10 zone, 1.17 billion. Again, we're sitting not too far away from that at 128.22, so within the zone. If the market is fairly quiet today and there's not too much data out, keep an eye on where the prices are around expiry and see what other markets are doing. As I mentioned before, when looking at expiries, the trading opportunities I look for is whether there's an option affecting to the expiry that's maybe putting a currency out of sync with what's going on elsewhere. So, for example, if the dollar's really weak in a lot of pairs, you know, significantly weak, but we're seeing euro dollar stuck around the level while, you know, maybe cables jumping up higher or Aussie dollars jumping up higher, you can think that perhaps the option effect is keeping that contained. That's potentially a trade to play catch up after expiries. That's one of the reasons we look at it, but also just to get a general overview of you know, what the option market's looking at, where it's setting its sights. Quick look at the data. Yesterday's data, we had the NBA out. It was another soft report. It keeps being soft, not as bad as it was the week before. Mortgage applications only down 1.2%. I say only down 1.2%. It was a big move the week before, down 11%. Purchases, small change there, a little bit higher, but nothing significant. Little bit of drop in the index overall. Refinancing, so that's remortgaging, that was down a decent amount again. All the while, the rate ticked down again just by 3 small points to 5.46%. So the negativity still in the housing market. So I'm not expecting any pickup in the main numbers as we go into May, which obviously we'll get next month in June. Durable goods was out again, softer than expectations, but still plus numbers. Not really much for the market to take in there. As we've mentioned, there's still potentially some inventory building from the likes of Target and Walmart and the other retailers that could be playing into these numbers. So next month again is going to be important to watch. If we get a big collapse there, it's going to be a sign that the inventory building has come to an end, and then we all have to wonder what's going to fill that gap. But as I mentioned, when you're trading fundamentals, when you're looking at the fundamental pictures to see what's happening in the economy, it is a bit of a long-term game. You have to take each month, wait for the next month, wait for the next month, just so you can build up that picture. Going into today's calendar, where are we? There we go. Not really a lot out today. We've got the next revision of US GDP for Q1. Backwards looking data right now, but we do get a couple of the other bits and bobs coming into it. So, we'll see what the consumer spending number was like, things like that, just some of the smaller intricacies of the GDP report. And we obviously are going to update the main numbers. We've got PC prices in there, but again, this is Q1 stuff. So not really relative. I think we've got, what have we got? I think we've got PC tomorrow. Have we, Kay? Is it PC? Yeah, so we get the April PC tomorrow. So that's more the one to watch, because this is now into Q2 stuff, being April. So much like the CPI report we got previously, these numbers are important. This is the Fed's preferred measure of watching inflation. So we need to see what's going to happen there, whether we see these core numbers coming down. Expected to come in a little bit softer at 4.9% versus 5.2% prior. So that's something to keep an eye on tomorrow at least. But back to today, yeah, apart from the GDP stuff, we've got Canadian retail sales. Get to see how the guys over in Canada, the land of beavers and syrup, holding up with their spending. That's obviously going to play into the expectations for the Bank of Canada. So that's it from the news and data stuff. You got anything else you want to add to that, Kay?
No,
before we flip to the prices?
Not. I think you did the tour. We can move on to more specific currencies if you want, and then maybe detail some of the lines or ideas, impressions.
Yeah, cool, mate.
We just had an update, sorry, on the sterling that Sunak is about to talk at half past 12:30, and talking about support for households on the energy bills and etc. Some article came out. Cable went higher, but not sure if it's Sunak related or just we're in the end of month, and we're trading value date end of month, so we can expect a lot of wonky stuff and strange moves coming out depending on what people need to hedge for the end of month. So it's going to be a bit difficult to see which move is headline driven or which one is end of month. So keep that in mind.
Yeah, it was a bit of a strange move, and I was scratching my head at how we busted through that 126 handle overnight. Obviously, a low liquidity time of day for pound traders. So, it's been a pretty solid lineup at 126, and we flushed it in the early hours. Just on the Sunak stuff, the bits and pieces I've been reading, for those that may not know, is that the government, when we got the raise of the energy price cap back in April, the government put in some policies where you could voluntarily apply for what is in effect a grant to take some money off your bill, basically a cash lump sum which you would have to pay back, because you don't get nothing for free in this world. And they're talking about doing similar again, and that's part of what Sunak might be announcing. And I've read that it could be about £400 they're going to offer people, and this one won't be payable back, which obviously means they're going to be taking it out your pocket somewhere else. But it's a 400 quid, pretty much a 400 quid stimulus check, if you like, compared to what the US did.
Yeah, the Times article speaks about up to £600 now, but let's
up to 600 now. So
let's wait and see what Sunak says, right?
Yeah, there's going to be strings and bells attached to it, but that's the general gist of what could be coming from Sunak. Maybe some other measures. So yeah, it might be a boon for sterling, but you're really talking about just propping up a dead horse, if you like, rather than anything that's really stimulative. So it's paying for excess energy bills rather than it's going to give retail sales a boost or the consumer a boost generally or the economy a boost generally. So on that basis, I wouldn't expect the pound to be shooting higher unless we get something else in with these comments from Sunak. So yeah, the pound cable shot up through that 126 zone. It can't get above it this morning now that the liquidity is greater, which could be significant. It's a bit of a brick wall at the moment. Whether we crack the egg, though, it remains to be seen. Sometimes when we get these breaks, it clears out the stops, it clears out a lot of the offers. Maybe some of those have come back in, but it could be that we've loosened up the level a bit here. And if it goes, then we might see it push on further. The next level that I've got up above there is 126, 35, 40-ish, let's call it. Again, it's another small step that we saw back in early May. But really, if we take it out, we've got to still go some before we get to any real significant levels. And, just taking the move this year, the 38.2 fib of that isn't until 127.64. So it's a long way to go. And then if we take the wider move here, going back to mid 2021, we've got a bit of confluence between the 38.2 fib of that move and the 50 fib of this year's move around that 129.55 area. Those of you who've been on the show since the start would have seen that area. It's a bit of fib confluence there. Even there, it's around that area that 129.5, 130, which will always be a big psychological number. Several support points there before we got the break. So a bit of a zone there to keep an eye on if we get up there, but a long way to go until then. And if we can't crack some of these smaller levels down here, then it just keeps the bearish pressure on. Don't know if you've got anything you want to chuck in on cable, K. Otherwise, I'll move on.
No, just repeating what I said earlier. Watch the top of the hours in sterling, especially in the European morning, because that's where the end of month needs are mostly done. They go regularly into the top of the hour. So, like for instance, right now sterling is bait. If this goes on into the top of the hour, maybe we can put a top in place right there. So in end of month, I'm keeping levels, the bigger levels in mind, but in between we have to be very flexible because the some of those moves may be a little bit strange and fast. We are now slowly getting into the top of the hour and sterling comes back a bit, so it might be linked to a fixing. Ryan, you there?
Hello. Yeah, I'm here.
Okay.
Yeah, quick look at euro sterling. I don't know if Stell's still here.
No.
If he is. No, I think he might have disappeared because I know he's looking at this one from the long side, similar to me as well. We've had this move back down from up near the 86, which is my big level. We've now got back under the 85 area, which is a little bit of a negative sign. But again, it's these looking at old levels, that we keep seeing, or old zones. So we've got this 84, 80, 85 zone here, back under there, and it looks a bit more bearish, and perhaps a move down to the lower 84s. But if we can hold here and push back above, then we're going to head back up again, and then we're going to see some of the old areas again coming into play, 85.30, 85.50, that sort of thing, before we get back up to those 86s. I'm still sitting long, my long-term position here playing the ECB off against the Bank of England pretty much. So no change to my thinking for that long trade. Happy to be sitting in it, and I'm just still waiting that break of 86. So let's have a look at $1 while we're keeping it to what we saw. So we got this, obviously got this big move up here, you know, from the 630s, a real rocket over a very short period of time after, you know, doing nothing for weeks on end. And as Kay said, you know, we came all the way back down over, you know, period of a week, couple of weeks, and
8 days,
shot all the way back higher again. Now, I was looking at shorts around about the 680 mark when we were around about here last week or so. Never got a chance, never got a look in up at the 80 level, and then waved it goodbye as it came all the way down. But even so, we're finding pretty much a support against the fib level, the 38.2 of the move. We did dip under it, and then we're finding it against the older 38.2 fib here, which is the much longer term one. And I'll zoom out quickly. So a case of where old fib levels turn into levels on their own. But this sort of zone here is now becoming a bit of a support point. So from there, we've seen a bounce back up. Again, I'm going to be looking here, but the news flow, that Global Times piece, we also had the Premier coming out and saying that they're worried about growth. It's just shifted the balance again back to everything was looking a bit better with Shanghai opening, and now things are looking a bit negative again. And you know, we're seeing that sentiment turning the jump in prices there. I wouldn't be surprised if we got to look back up at these 680s highs. I'm not too willing to jump in with shorts just yet. I want to see how the price action evolves and see whether we get a move up here. Certainly this big fib, the 61.8 up in the 6.85 is an area that we've been watching for a while. So that could be a good stretch point if we do get another round of easing from China. We know they're going to be fighting the negative economic impact, and they'll chuck tons at it. They'll chuck the kitchen sink at it to turn it around. So it could be another case where we get maybe a month or so or a few weeks of easing. They do cut some rates. We see $1 creeping up, and then I want to see what it does up around these highs. Is it going to stick up here, or is it going to carry on going up? If there's signs that we're going to stick up here because the market's, you know, priced in what they've done, or there's further communication that they may be at the end of any easing period temporarily or otherwise, then that's going to be my clue to maybe start scaling in some shorts. I know you were looking lower down at the 660s to getting back in long, Kay.
Yeah, I missed to get back long. Okay, I jobbed scalped a little bit, but is nothing worth really calling a real position. No, I still think in the end, well, depending on how the Fed will react, of course, but I think in the end we might end up close to 7 and then see how it goes. If Shanghai and Beijing reopen, it's going to be good for the CNY, CNH at first. But what is the PBOC up to? I think they have the whole key in their hands, right? If they say it's enough, then dollar CNY will probably go back down. If they say no, we continue to ease just to make CNH, CNY, and CNH cheaper because of them wanting to boost the exports again, we might then end up close to 7 before looking back here.
Yeah, and it's important to note with these guys that they can be pretty clear. I mean, when we were sailing up at these 680s and we just come off a little bit, it was just after that we got the comments from one of it was a banking and insurance regulator or whatever they are, saying that easy policy won't be a one-way street, and the moves in the yuan won't be a one-way street. And that was a clear signal to say, okay, you've had a nice little run on this one, but don't think it's going to go on forever. And that's what they're like. So we could get similar, and that's what I'm going to be looking for. Let the market think that they're going to ease. We might see them easing, but at some point they also might turn around and go, okay, boys and girls, the free lunch is over. We're going to draw a bit of a line here, and that's when you see a turn in the market, because that's pretty much what this move off the high was. It was them setting their stall out and saying, we are where we are. You know, you're not gonna see this thing running all the way up to 8 or anything like that in a straight line. So they're pretty good with giving the clues, and they're very tradable. So keep an eye on that. So we'll look over at dollar yen quickly. So Kuroda's done a bit of damage this morning, not a huge amount. I mean, it dropped from just above 127 down to 126.50s, I think, looking at it. So, you know, we couldn't quite get down to the prior low the other day, which is, you know, in price action terms can be significant. It potentially shows that there's buyers off of this level just sitting a bit higher up. Now, I was trying to long off this area here, and I tried the break trade the other day. Limited success. Got some in, got out some on my stop, so made a few pips, but not as much as I'd have liked. And we've been talking about this 127 let's call it 20 zone. You know, it's really been and ahhing about what it wants to do here. I think this change of tone, or this increased tone from Kuroda, has added to the sell rally mode here. I did jump in at 127.80 after his comments had dropped out, because I was just sitting there thinking I need to have a bit of a short on. So I've got a small trade here. And I think from now on, I'm going to be looking at maybe putting on a more significant short if we see any jumps higher in this one, though that may be a fleeting, or maybe a bit expecting something that's not going to happen. I would have liked to have been getting into shorts in the high 130s. Missed that boat again. Part of life of trading, but I think we're definitely going to be seeing perhaps the rallies hit a bit more, and it's possible that Kuroda is going to ramp up his talking, and we get a more significant move lower in this pair and yen pairs in general, purely on the fact that which way the wind's blowing. You know, we know the Fed hike path. We know the data's starting to turn soft. You know, the reasons for being long dollar or seeing this one jump back up to the highs are diminishing right now. And if it ain't going up, there's only one other way it can go, apart from sideways. So yeah, if we're going to get a second wind from the Bank of Japan side, then, you know, it increases my conviction to be on the short side of this one rather than the long side. So if we do see this break here, you know, I'm going to be watching this 127 level again. If we get a test there and a hold, and we start to see a real, you know, confirmed hold of that level, that's going to suggest that we're going to get further downside here, and then maybe we're going to be looking at the fib that we've had our eye on. You know, the fib of the big move up here down at that 125 area. Now, what I'll also mention quickly is that the cloud formation that a lot of Japanese retailers look at has been creeping up. We've been way above it, but that's coming in the sort of mid to high 125s. So keep an eye on that. I haven't got a cloud chart here on TradingView, but those of you in the chat room would have seen I put that up this morning. Just been keeping an eye on it because it can be a significant technical indicator for this pair. As I say, it's in the mid to mid high 125s at the moment, so keep an eye on that one. Okay, I know you look at the cloud now and again. Do you want to give the viewers a bit of insight into its importance?
Yeah, so the Japanese traders, even the investors, they talk a lot about it, but they will most likely trade off or watch the daily cloud, not necessarily anything below, although 4 hours has become a little bit more popular in the past years, it seems. But yeah, they do trade off the clouds on closes, on whether it closes above or below, really. In generally speaking, on the Ishimoku clouds, the thinner it is, the faster we could get a move. The large clouds usually hint at more range trading than anything else. So that's the basics of it. And then you have like the lagging indicators when one crosses the other. That gives them an indication as well. But basically, yeah, the main moves or the main holds or breaks are done when clouds are holding or breaking. Inside clouds, usually Japanese investors, Japanese traders don't do that much.
Yeah, and they're mainly those guys. I mean, you know, the Japanese traders, you know, as they call them, Mr. Mrs. Wanatabe, is they focus their clouds on the yen. So I know you get some people who might use it on Aussie dollar or, you know, other markets. But if you're talking weight and numbers of where the bulk of people are watching these cloud formations, it's mainly in the yen pairs, not even really in euro dollar or things like that. Right, so that's a look at the market there, a few of the prices. Let's have a quick scoot around some of the others quickly. Dollar CAD still doing its umming and ahhing thing here. Not really, looks a bit listless at the moment. We are getting a little bit of a move up to the high 128s now and again, up to near that 129, but nothing really significant. No real sign of looking at the downside. These candles pretty much tell the story. A little bit of indecision, no real direction there. Maybe look at the retail sales. If we get a big variation there, it might kick us to one edge of the other of this, you know, the intraday ranges. So that might be worth a little look for a trade, a little fade there perhaps. Aussie dollar, again, another one going a bit sideways now since the break up through back up through 70. We've had a little poke above 71, can't sustain a move. Coming down, you know, we don't really know where we're going to be setting support. Let's take into the shorter time frame. So, you know, it looks a bit messy. You know, we've got some minor support and resistance levels, and then they're breaking. So, you know, I don't like it when markets just, you know, make a high here, make a low there. There's no real rhyme or reason to them. You know, I like to see the levels build up, so we get multiple tests, multiple holes. It just builds up the picture. Again, this is looking a little bit messy. No real sense of direction. But take it on the wider. We need to get above 71, 20, 30 for maybe a push up, even though I've got another resistance band up here to the downside. I think the main level is still going to be down at this 70 handle. So if we get a breakthrough there, that's when we get another sense of direction. Just looking around, seeing other things. Now I know Anne yesterday asked about the Dow, so let's have a look there if I've even got it on my charts. There we go. So anything specific you want to know about this one, Anne? You know, just generally, it looks like we're in a bit of an uptrend here. Yeah, go on, mate.
Looks like a quadruple top there. The last bit.
Yeah, I was going to say we've got a. It's in a definite uptrend, but it's hitting its head at the moment round up here.
It's hitting its head seriously.
Yeah, 32, 40, 50 area. So, you know, if you want to look at it from a technical aspect, if you want to trade, then potentially a break trade, you know, through 50, 60. You might want to give it a bit more the way the volatility is in this one. So, you know, maybe somewhere through 70. If you're looking to get long, look for a break there. You can keep a stop fairly tight, you know, maybe just around the 32,200 level. But definitely in a bit of an uptrend here. Coming out a bit wider. Let's see what it's doing, because that's more of a short-term look. So if we take the wider look, you know, we can talk about a short-term uptrend, but it's in the middle of a more longer term downtrend. So look at your levels there, the 38.2 fib of the COVID bounce, let's call it that, 29,805. So that's an area you're going to be looking at. Looks to also have been a bit of a support and resistance zone around, this 30,000 mark. We look at the big round numbers; they're always going to be significant. So if you're looking to wait for a dip to buy, keep an eye on this prior low. If we break that, then we're probably going to get a look at the 30k handle. So get your 30k hats ready. If you still got them in your cupboard from when we moved up, I knew I shouldn't have got rid of all my stock. I knew I'll be able to sell them again, but I knocked them off cheap when we went up to 35k. But yeah, so that's what you're going to be looking at there. As I say, look for a break above, maybe 32 to 70-ish, and you might get a push up towards the 33s. Anything else in the comments there? It's quiet, you guys, today. You need waking up. I want some questions thrown at us. Let's have a look in the Q&A.
Just if you can pull up the.
So Naha in the Q&A. Thank you for the show. I wanted to ask you how you determine whether short-term sentiment has changed the big picture. Good question. When you're talking short-term sentiment, you obviously have to you have to match it off against the big term picture, and the way you do that is you look at the bigger levels. So for example, let's go back to dollar yen, because it's a pretty good example. So if we take just today, let's go into an hourly. If we take today, okay, we've had these comments from Kuroda. Dollar yen sold off. Short term, because of his comments now, the market's going to be thinking, more about the Bank of Japan. Are they going to be going into a tightening cycle? Are they going to look to hike? Are we going to get more news? So the short term sentiment, at least right now, is a bit more bearish for dollar yen. Now, later on, or today, tomorrow, we could get some hugely massive data, good data out of the US. PCE tomorrow could be higher than expected. And all of a sudden, you've got another sentiment change, at least from the dollar side, from the US side, and you see dollar yen rally because yields are rallying. And so you've got to look at the intraday sentiment versus the longer term sentiment. The longer term sentiment at the moment is that the Fed are on their hike path, the Bank of Japan are still on their dovish path. So even though we've got this small intraday change in sentiment, how are we going to know when it turns into a full-on longer term sentiment? Well, we look at the levels. So if we start getting down and breaking these fibs here, and it's being driven by raised expectations of the Bank of Japan, this is going to be your guide. How strong those expectations are going to trade, are going to change, or going to be. You look at your levels. But when you're talking sentiment, it is hard sometimes to pick up the sentiment. We've had days. I remember a week or so ago. You look at the pound. We finished a week. I think it was 2 weeks ago. We finished the week, and the pound was down here. And you were thinking, where's the next stop? Is it going to be 120 or worse? And then we came in the next Monday. Risk was a bit better. China news was a bit better about Shanghai. And all of a sudden, it's a different world. You come in and the market has just flipped. So then you've got to look at it. You've got to match off the intraday sentiment, if you like, with the bigger picture. So we got this jump in the pound. It's been going up ever since. But has the narrative changed in the UK? Has the UK turned a corner? Has it suddenly got better? Are we not expecting recession? None of that has changed. But the market has changed, and you've got to go with it. But to determine how far the market's going to take this, you look at your levels. And if we can't break some of these short-term minor levels here, then it keeps the wider sentiment in play. So I hope that's giving you a bit of an idea now how we look at sentiment and things like that. Adam, on the trader funding program, saying in a winning position, which is showing a nice profit, your stop loss is positioned to protect your profit, but you can't hold a position over the weekend. What do you advise? Right. Well, obviously the rules for the traders funding program are pretty strict in holding trades over the weekend. That's obviously there to protect you guys as much as it is to protect the accounts overall. If you're in profit and you need to do something into the close the trade off and see where you are. You can always get back into it on the Monday. If nothing really has changed, if we're opening up at the same levels, there's no real big news, you want to carry on the position, just re-enter the position. You may not get your original entry price, but if nothing's really changed, you're going to be getting in around, maybe 10, 15 pips from what your prior entry was. So you're not going to be too worse off. And that would be my suggestion. I mean, depending on what positions I'm into a weekend, depending on how I view any weekend risk, I can close down my positions and re-enter them the following week as we open up myself. So it's all part of managing your risk, and this program forces you to use that discipline. It forces you to get into that mindset to protect your risk. And that's a good thing about this traders funding program. Yes, it is fairly tight on its rules, but they're not too restrictive. But I think a lot of traders need that foundation, and once you've got that foundation, then you can broaden out a bit. Then you can make an adjustments like I do. I wouldn't trade as disciplined as the traders funding program would make you guys trade, but then I've been doing this a lot longer, so I know when to stretch things and when I want to sit on something and when I want to keep my risk there. But until you get that early foundation and it, and it becomes as automatic as breathing, then you can't really move on to the next stage. And that's something I say to all traders, whether you're doing the program or not. You need a solid foundation. And if we get some quiet days into the summer, I want to touch on more things like that. A bit of the trading psychology, a bit of what some of you guys and girls might need to learn, or take a step back. Sometimes you need to take a couple of steps back if things aren't going well. Relearn stuff, re-educate yourself, so you can make those 5 steps forward. Let's have a look. Mike, Kuroda did not say anything new. I believe he will just have more clarity when the Fed starts QT in June. No, he didn't say anything new, but it's when they say things new, or when they say things again, or when they repeat things. It all depends where the market is. I had a comment on Twitter saying that he said this sort of stuff as we came out of the GFC. Well, that's fine and dandy, but those different conditions then. No one believed the Fed was going to be hiking as significantly as we came out of the GFC as they are now. Why is that the case? We've got inflation now. We didn't have inflation when we came out of the GFC. And as I like to point out, if you remember, we came out of the GFC, and in 2019, the Fed were cutting rates. Again, they didn't have the inflation issue. Now they've got the inflation issue. Now we've got every central bank playing catch up. So really, for the Bank of Japan, it's not been about that they won't. It's been about, well, we're watching the clock to see when they will, because everyone else is, and inflation is there for everyone to see. We know it's going to last longer than they expect. They were all telling us it was transitory beforehand. It's not transitory. So really, sometimes they can say the same things, but it depends at what time period they say it in, and where the market is, and what's going on at the time is as to whether it becomes more valid than something they said 6 months ago. Kay, you got anything you want to add on things like that, talking expectations, and when you get these subtle language changes?
Yeah, that's exactly what I've been saying all along before. It's exactly the same as the Fed did May, June last year when they started to change tone, and the timing is of utmost importance. And then if you look at the subsequent dollar move, I think we know what happened there. Is the last time that that the euro dollar traded up at 117, 118, if I recall correctly, and since then we're 10% lower. So those things we need to, if you look at the macro, the fundamental side of things, these are like alarm bells that should go off. not necessarily to put on a trade in the next minute, but keep it in mind and see how the market reacts, and see, and you can also define or find out the weak side of the market when people are saying things like that. If the dollar yen would have been monster bid right now, such a comment would have been 40-50 pips, an algo reaction, people a bit scared, and then we would already be back at 127.25, 127.5. Right now, we are hanging towards the lows, so the market pays attention to it. Although today there's a part of dollar weakness. We are end of month, so some of those flows may be in there as well. But still, I mean, the market pays attention to it, and that's we are not different than the market. We are part of it, so we should as well.
Yeah, exactly. You know, and Nahar makes a point there. You know, I think it depends on how the market interprets the news. Same case with S&P comments last week. Exactly. S&P comments were a bit stronger than what Kuroda is saying, and look what happened to you know, Swissy pairs. You know, we were trading up near the 105s in Euro Swiss, and wallop. You know, you're now 200 and over 200 pips lower, just on a couple of comments from a central bank, because they were fairly stronger than what we've got previously. That's all it takes, just a switch, and then you change the sentiment around. Brian wanted to have a quick look at euro dollar again, mate. Give me something you want to look at. What are you looking at? Are you want a long? Or you want a short? Are you in trades? Are you not in trades? Have you got a view yourself? You know, I can give you my view, but I want to hear what you are thinking about it. So tell me what you're thinking about it while I natter on. Yeah, so euro dollar again, undecided where it's going to go from here. We had the break up through this 106.30 level. We spoke about it before. We pretty much saw it hold as support yesterday. We probably called it 30.40 as a zone. In between that, we had some minor levels. This 106.60 that I flagged yesterday, we held it for a little bit, got back below, wishy-washy. Today, it's now solid support again. We've had the break up through 107. So what have we got? We've got a pretty nice intraday range or short-term range, probably against these highs, you know, 107.40.50, and down towards this break zone here, you know, 106.30.40. So 100 pips there for the euro to play in, which, given that this can be a bit quiet at times, that's a decent range to play in. So, you know, if you're looking for longs, you're in the middle here a bit. Maybe look to see if we get a solid hold of 107, but I'll be more inclined to be looking at that 106.30s, 40s, and see what happens into that 107.40.50 area. Take your clues from that. Do we stay in the range? Gives you a bit of scalp opportunity, maybe to scalp the range, but potentially we look at the break. If it gets above those highs, then we could be pushing on. But it's not too far until the next main resistance area, you know, the 38.2 fib of this move, 107.87, and into the 108 area. Got a bit more, you know, got a bit of traffic up here to the 20s, 30s. So a bit of a congestion zone, if you like, here. So if we do get above 107.50, we haven't got far to go before we run into the next bunch of speed humps. So if you're taking a break long here, you've got to think about what you're going to do when you get here. You're going to take some profit, maybe lock in. But if you're in from longer down, and I'm still long from the low 104s, I'm just sitting back and looking to see what we do. And if we get a break up to that congestion zone there, that's where I'm next looking to take a little bit of a slice off my trade and see what it does there, and maybe start, you know, significantly putting my stops up behind. So let's have a look. Anything else going on? You're long at 106.85, 107.37. Okay, well, good stuff, mate. You got a bit of margin in there, and I hope you smash it out of the park. 20 pips to go, 20 odd pips to go. So keep it in there. Can I just start, if you got time, can I ask, do you just scalp, or, you know, how do you go about your trading? Because one thing I will speak to people about at another time is just managing trades and stuff. If I like to do a short-term trade, I like to ride it as far as possible. I don't have profit targets. Profit targets is the last thing I have. All I have is places, speed humps in the way of my trade and what I do around those speed humps. So if I'm in a winning trade, I want to push it as far as I can, and until either I get hit on my trailer or I run out of amounts to slice it. You're leveling in, averaging reasonable targets. Fair enough, mate. And as I say, very good luck to you. I hope you smash it out the park.
Yeah, and just bear in mind
mate.
today and tomorrow, Monday, the end of month flows again. I will repeat. It might be the case that the reason why we are up here are those kind of flows. So bear it in mind. A bit of strange moves can happen the next today, including 3 sessions.
Yeah, and it's a bit of a wonky one today, this month, because of the US holiday on Monday. It makes different value dates for obviously the different countries. So value date for the UK is tomorrow, but value date for the US is today. So that's where there might be a bit of disparity. And for those guys and girls who are in the ForexAnalytix platform and in our chat room, if you go into the news and research room, we've got some bits and pieces on the let's get it up here on the month-end flows. Just the seaweed calls from the banks. So you can see what Morgan Stanley is predicting there for their month-end flow. And we've had Barclays in yesterday. Kay dropped that in. Some of these you take with a huge pinch of salt, but it just gives you a general idea what the market's looking at. And as I say, you can get that in our chat room if you're a subscriber there. Okay, I don't want to keep you guys and girls any longer because I know you've got plenty of trading to do, plenty of pips to make, and I hope you all smash it out of the park. I will see you again tomorrow. We will see you again tomorrow. That'll be my last day for a week because I'm off on a little bit of a trip. And I'll be leaving you in the very capable hands of the K-Man. And no doubt we'll see some other faces popping in and out. As always, thank you very much for coming to the Flow Show. I hope it's been good for you, and we shall see you tomorrow.
Have a good day, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.